Becky, we have an issue.
Yes.
We have to discuss. It's a little on the nerdy, wonky side, but as we've reported, the BLS has downgraded its estimate of the level of employment by 500,000 jobs through the year ending in March 2019. These will be put out in the individual months in January when they put the benchmarks back into the BLS numbers. But what that means is the run rate of the economy in terms of jobs was 41,000 less by month in that period.
How did they, why did they figure this out now?
It's a great question, and I'll tell you why, and it will lead to my biggest complaint of all in the history of covering this data. They get to true it up with the actual state unemployment claim data about once a year, which means the data is out there. If they could get the computers in the states to communicate with the federal government, we could have more accurate jobs numbers. But as it is now, they all can't communicate together to the federal government. So we have to wait every year for the benchmark revisions. I'm off my high horse.
500,000. How much does that compare to what we've seen in years past?
It is a larger revision than we've had in the past. It's a 0.3% revision. And the prior years, they brought it down quite a bit, which means their estimates have been better, to 0.1. An asterisk you might put on this discussion is that sometimes at turning points is when they get these larger revisions in the economy. So it could suggest a slowing. It could just as easily suggest we're running out of workers. The Beige Book yesterday, full of this complaint that we can't find workers. We have all kinds of problems doing that. The thing is that Wall Street's estimate of what a good number is needs to come down. So this 195 in ADP, if it follows along tomorrow, is actually a better, stronger number given what might be the new run rate than it otherwise would have been. Right? And then we got a guy who really knows this stuff.
Mark Zandi is here.
That's just right.
Mark
Did I get that right?
The chief economist at Moody's.
Yeah.
And that's what you think it is? It's either a slowdown or we just can't find the bodies for it and we've got to lower our expectations of what a great number is?
Both. I do think the underlying rate of job growth, abstracting from the vagaries of the data, the revisions being one of them, just one of them, is probably half the ADP number. It's probably closer to 100K. So we're producing about 100K per month if you consider all the vagaries of the data, which is consistent with 2% GDP growth. It's consistent with unemployment that hasn't changed appreciably in a year, stable unemployment. And this highlights why the economy is at risk, because if job growth slows any further, that means unemployment will start to rise, and that will be the fodder for recession.
It's a weird world where I had a lot of talk with the National Association for Manufacturers, and they have a smart chief economist over there, Chad Muche, and I said, why is manufacturing slowing? And he gave me 4 reasons. He said global uncertainty. He said the trade war. He said worker limitations.
Yeah.
So it's a weird world where you have a kind of slowing economic activity, but you also can't find people.
Yeah.
And so, I don't quite know what to do with that, because usually you can't find people because business is so good.
Yeah, well, that goes to the record number, the previous record number of open job positions. It goes to why, abstracting from this month's the gain in small businesses, in the previous 3 months, it actually declined in each month.
Right.
And that likely goes to the inability of small companies to fill the open positions.
They're in the worst position, right?
Because they're competing against big guys like Moody's, and they can't compete.
So let's cut to the chase. How's the economy? Are we going to recession? Is everything going to be all right?
I think it depends on the president. I think if the president pursues the trade war, if he follows through on all of the threatened tariffs, the likelihood of recession next year is greater than even. I think we're right on the cusp.
Greater than 50% chance for next year?
If he follows through, yeah. I think manufacturing is in recession. The ag sector is in recession. Transportation distribution are in recession. They're on the front lines of the trade war, so they're feeling the effects first. The next to go is the rest of the economy, and that goes back to the job market. If underlying job growth slows any further, unemployment rises, that undermines consumer confidence, spending, and we get into a vicious cycle called a recession. And we're right on the cusp of that. So he's got to end this thing toot sweet pretty quickly. Otherwise, we will be in recession.
All right. Mark, thank you for being here.
Sure.
Just back to the ADP numbers, the 195, the biggest strength is that's reflecting is what?
That number is there was job gains pretty much across the board. So we saw, particularly in education, healthcare. I don't think it's seasonally correct for the seasonality.
Okay, because there was a 13,000 pop in the education thing. I didn't know if you were counting teachers coming back early. Sometimes that happens.
That's always squirrely that month because maybe the season won't pick it up. Here's the other thing about August. This is something you should consider for tomorrow's number. The response rate from companies to the BLS survey is very low in August, particularly big companies, because people are on vacation.
Yeah.
And that means that you'll generally get a low number on the month.